that from Bloomberg World Headquarters in New York to our audience worldwide. I'm David Weston. Welcome to Balance of Power, where the world of politics meets the world of business. We're going to start today in Washington with that $2+ trillion package that we were told yesterday by the Speaker of the House would be forthcoming today, but now there seems to be a fly in the ointment. Let's go to our chief Washington correspondent, Kevin Cirilli. What's the deal, Kevin?
Well, the latest is that they're still anticipating to go through the procedures in order to have the vote sometime within the early afternoon or early evening. I'm told that in consultation with the House Sergeant of Arms as well as the House Physician, they've actually tweaked some of the voting procedures, David, for how they will be voting on this. Their own members are only going to be able to enter into one door. They've scrubbed the entire vicinity. Lawmakers are going to have to use hand sanitizer before entering in. So a host of different concerns and precautions being taken into account for this vote. But some lawmakers are expected to vote against this, though not a significant number that would derail it.
How many people do they need there for a quorum? And are they sure to get it?
Well, they're hopeful that they are going to get it. And in order to have the quorum, I'll have to get back to you on the precise number, but they would have to have at least more than a majority. And beyond that, David, many lawmakers scrambling to make the vote in time just because of flights and precautions that they want to take for this as well. Boy,
quite a lot of drama, I must say. Okay, thank you so much to Kevin Cirilli, our chief Washington correspondent. Let's go from fiscal stimulus to monetary stimulus now. We have Bloomberg's Mike McKee here, who had two very important interviews with Fed regional governors today. So, Mike, welcome. What did you learn today?
Well, we're talking about not just a $2 trillion bill, but because $454 billion in the bill goes to the Treasury to support Fed actions, they could leverage that up 10 to 1. So we could be talking about a $6 trillion bill here. Both Fed presidents said that they want the economy to come back as quickly as possible, but it could be a while. We could have some really tough months ahead. But if the stimulus money gets out there, it should help people hang in. And then we could see the economy return fairly strongly because we were strong going into it.
You talked some about jobless numbers, about unemployment numbers that were not nearly as bad as what some people are talking about, I thought.
Some members of the Fed see things like 30%, Jim Bullard of St. Louis, but Kaplan and Bostic were thinking in the mid-teens, and then that gradually comes down. But even Robert Kaplan said we could see the economy contract by 20%, an annual rate of 20% in the second quarter.
Tie this back into that $2 trillion package here, because one of the things people are really concerned about is getting money right away to small businesses. Some people are saying they need the Fed to really help get that done. What's the Fed's role in that?
Well, the Fed is probably going to be backstopping banks. There's no place at the Fed to go put in an application. So what they'll have you do if you're a small business is go to your local bank. The bank will make you a loan, and then they can sell that loan to the Fed. So the banks will be the intermediaries because they can move much more quickly. They know you, they know your credit history, and they know what you need. That program, they're working furiously to get stood up as quickly as possible.
We're talking about thousands upon thousands of different enterprises that are looking for these loans. Do we have any sense of logistics involved in this? Are we up to this?
That's a good question. When you look at the administration, it's understaffed anyway, so it might be hard to get it going. Historically, even when you have a fully staffed administration, we saw in 2008 and 2009, it took months to get this out the door. The Fed feels it can move fairly quickly, but they have to get the Fed, they have to get the Treasury, and they have to get the banks all in line. A tough job.
And that's after Congress actually votes on it.
Yes, once they get around to voting.
Might not happen as soon as we thought. Okay, thank you so much to Bloomberg's Michael McKee. And now it's time to get a check on the markets, and for that we turn to Taylor Riggs. So we had 3 in a row. I'm not sure you're going to make 4.
Right, classic risk-off day today, right? Equities lower, full faith and credit catching a bid, 10 and 30-year yields down by about 11, 12 basis points or so. You're only about 20 basis points higher than the record low that we saw below 50, 0.5% or so on the 10-year a few weeks ago. You're also seeing yen catch a bid relative to the U.S. dollar and the Aussie dollar. That's stronger, I should say, by about 1.3% or so. Gold is a little bit weaker, which is interesting, and then you're getting some dollar strength, which is classic. We've talked a lot about some of the dollar strength funding issues that we have had, and then crude, of course, energy is the worst performing sector. So you are seeing markets behaving rationally, normally, as they would in a classic risk-off day today.
Well, listen, a rational market's a good thing right now, I would say. I'll take a rational market. At the same time, there are some stocks that are particularly getting hit, I guess, because of the stimulus bill and what's not in it.
Yeah, I want to take a look at Carnival Cruise Lines as one example. It was off this morning as much as 13%. So there was a change to the U.S. stimulus package that would bar companies that are not incorporated in the U.S. from benefiting from this aid. This is according to a report from Dow Jones. So it was a last-minute change in the Senate bill. It limits relief package to companies that are based in the U.S. with the majority of their workers based in the U.S. That language had not been included in prior drafts of the plan. There's a lot of concerns, of course, about some of these companies that maybe they operate out of Miami, but they're based in or incorporated in Panama, incorporated in other areas as well. And so making sure, of course, that companies that get this aid are U.S. corporate taxpayers.
And the president has been pretty explicit. He would like any cruise lines to get aid to make sure that they're incorporated here in the United States. A theme of his throughout his administration. Thank you so much to Taylor Riggs for that report on the market. Up next, British Prime Minister Boris Johnson becomes the first world leader to test positive for coronavirus. And now his health secretary has it as well. We'll go live to the UK next. This is Bloomberg. Balance of Power on Bloomberg Television and Radio. I'm David Weston. British Prime Minister Boris Johnson has tested positive for coronavirus, and now his health secretary, Matt Hancock, has it as well. What could this mean for the operations at number 10? We welcome now Bloomberg European close anchor Guy Johnson. So, Guy, this is terrible, of course. We don't want anybody to have it, but he's not alone in the UK. It looks like your numbers are spiking up even as we speak.
Yeah, the numbers are spiking up really quite sharply, David. Moving very quickly in the UK now, the virus. Let me give you the latest figures. Overnight, the death toll rising to 759 from 578 yesterday. That's a big expansion. The number of cases rising from 11,658 to 14,579. And the UK is being criticised for not testing enough, so the expectation is that those numbers are even higher. And as you say, David, the numbers now include the Prime Minister and the Health Secretary, though both are saying their conditions are mild enough that they are going to continue to lead the UK's efforts against the virus, though both obviously will be self-isolating, including the Prime Minister self-isolating from his fiancée, who is pregnant right now, David.
Oh, my. Well, listen, we hope that they're mild. Anyone who has it, it's mild. At the same time, we can't necessarily predict this. Are there plans afoot about what might happen if, in fact, he was incapacitated for some period of time?
Yes, there is obviously the normal way of dealing with this in terms of the way that it would be handled, in terms of handing power down to the Deputy Prime Minister. But at the moment, this doesn't seem to be the case at the moment. But the UK certainly is having to think very hard constitutionally, David, about what could potentially happen next if significant numbers of the Cabinet were to be struck down with the virus. But as Boris Johnson was indicating a little bit earlier on, the wizardry of modern technology means that he is able to continue to communicate with the Cabinet and the government and make sure that the effort against the virus is going to continue as smoothly as is humanly possible at this point, David.
Guy, there's a lot of second guessing going on, which is not necessarily constructive, but has the UK really shut down at this point? There were some people thinking that the Prime Minister was a little slow off the trigger here.
There has been much criticism that the Prime Minister has been slow. The initial move was that we would have a sort of herd immunity sort of strategy being developed. That was quickly abandoned when the research from Imperial College indicated that the National Health Service, the NHS, would be quickly overwhelmed by the virus. So there was a big sort of volte-face in terms of the UK approach to the virus, and we are now living in a virtual lockdown in the UK. You're not really meant to travel from your home. You're only allowed to do so to exercise, but that is limited. You're really only allowed to do so to go to the supermarkets, but that is limited. Most shops are now shut. Most people are now working from home. So it's been a very quick development here in the UK from this idea that we could take a more laissez-faire approach to dealing with the virus to a very big kind of shutdown of the UK economy and some of the social norms that we normally accept here to try and make sure that the NHS is not overwhelmed. But as we indicated at the start of the conversation, David, the numbers are climbing and climbing very aggressively at this stage. And as I indicated, the government is facing a lot of criticism for not testing enough. So the expectation is that those numbers are significantly higher than maybe the official figures are indicating here in the UK, David.
Guy, thank you so much for joining us today. That's Bloomberg European close anchor Guy Johnson from London. And now let's get more on how Europe is responding to the coronavirus. We welcome now Stephanie Kelly. She's Aberdeen Standard Investments senior political economist on the telephone from Edinburgh. So welcome, Stephanie. Good to have you here. Give us a sense of what's going on right now in Europe, either in the UK or in the continent itself, in terms of the economy. We hear various infusions of cash. At the same time, in Europe, they're hesitant to have Eurobonds.
Well, I think that's kind of the long and the short of it really is that there's huge action being taken here in the UK, in Europe more broadly, to try and stem the worst of the economic crisis that this is likely to create because economies are essentially shut down. The challenge that you have with this really is, and I think particularly in the Eurozone, you're seeing it play out, is that even though there's a recognition that this virus can hit any country equally and it's not a country's fault for that taking place, nonetheless, you're seeing the same old arguments take place about risk sharing and risk reduction, and that makes it really hard to have conversations about things like Eurobonds or fiscal risk sharing, which in theory is what you're seeing in kind of more federalized states, like, for example, the United States.
So explain that to me if you can, Stephanie, because we certainly have heard about Germany in particular being very frugal and not wanting to run up a deficit. They've gotten past that, and they say we have to have stimulus for Germany here. At the same time, as I understand it, Germany is the one who's really reluctant to have a shared responsibility bond, raising funds, the sharing across the European zone. Are they going to have to back down off of that?
I mean, what you're seeing here is essentially, a recognition, at least at the sovereign level, at the country level, that, fiscal space, some fiscal leniency is needed. And indeed, as you pointed out, Germany has taken steps to push away from what we used to call the black zero. So there are steps being taken, but there's a difference between individual countries deciding that they're going to spend and having this kind of risk sharing. So having essentially, countries across the Eurozone in the north and in the south having kind of sharing the risk that comes with having European bonds. Now, that matters because, as you say, countries like Germany, although they might be shifting the dial a little bit in terms of their views on the fiscal, again, it's worth bearing in mind, we shouldn't think of these as outright stimulus. This is very much a kind of a trying to tackle a huge crisis as opposed to an outright stimulus. At the same time, you have the same issue that countries in the north who see themselves as long-term, more kind of stable, lower government debt-GDP ratios, that they see themselves as saying, okay, well, we're willing to share risk with the peripheral countries, but so long as they reduce their risk first, and then it's not so much of a risk for us. Obviously, the peripheral countries have the exact opposite view, which is, okay, well, if you share the risk with us, then our risk will be reduced. And so this conversation has been going on since the last crisis, but I think it's really going to be put under pressure in the next couple of months. Yeah,
as you suggest, it's not so much stimulus either here or there as it is rescue or mitigation at this point. It's not really stimulating the economy. What about what's being done here? Do Europeans look at that and say, yes, they're really moving now with this over $2 trillion being injected into the economy here?
I think what's kind of most striking about it is some of the parallels that you can draw between the UK and the US at the moment, which is specifically that investors ordinarily expect that kind of centre-right or right-wing governments or kind of economically conservative governments will be economically conservative even in kind of times of crisis. I think what this crisis is doing is really shifting the middle ground, and in particular where it's shifting it in the US and here in the UK to a lesser extent is around this question of what's the appropriate social security net, what's the appropriate level of funding for healthcare, and what's the appropriate structure for healthcare. And I think the interesting thing from an investor's perspective is how this might shape not just the kind of short term, obviously this huge fiscal stimulus, or at least this fiscal bill to try and tackle the crisis, but also the longer term impact that this might have around what people assume is normal in terms of a kind of a social security net and in terms of healthcare in the US.
It's a fascinating point because after the 2008-2009 crisis, there were people who said basically we took a lot of the debt from the private balance sheet and put it on the public balance sheet. We sort of nationalized that, a lot of debt, as it were. Are we going to see a much more aggressive form of that, both in Europe and the United States? Essentially, the government playing a much bigger role in the economy and even in business, as we're looking at perhaps the federal government investing in corporations here as part of bailouts.
Well, I mean, this is essentially, when economists have talked for the last 5 years about, central banks being very much kind of limited in terms of the rest of the space that they have to act and to kind of, shoulder the burden of kind of economic strain. Now you're seeing fiscal policy come into action, and in particular, because you've got centre-right governments, they tend to prefer to engage with companies rather than kind of directly stimulate households, although in the US bill you're getting a little bit of that as well. So I think that it probably does suggest that going forward, there's difficult, very important kind of structural framework questions to be asked about what does it look like if the government is supporting companies, and what do companies give back in return? How much kind of control or otherwise do they have? And I think that the framework question is an important one that we're going to have to kind of see how that plays out over time.
And it may not be too early even to think about recovery. We're nowhere close to that right now. We're just trying to save the patient, but we will do that. At some point, we'll be talking about recovery and how are we going to get the economy growing again? United States economy, European economy, global economy. Is that going to be more of a private sector issue or a public sector issue in your judgment?
Well, I think the reality is that, the biggest question is the shape of the recovery and how long it takes to come through, but also the extent to which we go back to where we were. And I think one of the big debates that's ongoing, I think, across the investment space is around whether you get that kind of traditional U shape or whether instead you get kind of, you do recover, but that recovery just doesn't go to the same growth rates and growth levels that we saw before. And I think that's the kind of the question mark for both the public and the private sector. It's clear at the moment the public sector is shouldering the burden. But in theory, assuming, again, an awful lot of assumptions on the kind of epidemiological side, assuming that this is a short-lived issue, and, permanent changes aren't made to the way that individuals behave and the way that individuals consume and indeed the way companies behave, I think that then you're talking about a more normal, recovery for the private sector. However, of course, as I said, the centre ground is shifting a little bit. If this is very drawn out, or if indeed you kind of get dipped back into, social distancing as this virus comes and goes, then I think that has kind of more meaningful impact for the shape of growth going forward in the public and the private sector.
Stephanie, if you're either a decision maker in the governmental level or you're an investor, what data can you use right now to make any sorts of decision about what's going on? I mean, the economic data, everybody says they can't really pay attention for right now because it's moving so quickly and we know it's going to be bad for some period of time. And for that matter, in the markets, I'm not sure, for example, how you price the future value of earnings when we don't have a clue.
Well, it's challenging at the moment, but in some ways, there are many places that you can go to continue to at least understand where we're at. And I think a lot of the debate that goes on is kind of trying to understand where we're at. And, in particular, there tends to be a lot of noise, particularly in the sentiment data in the short term. But when we think about, a year out, 2 years out, 3 years out, and if you're kind of a longer term investor, then you're asking yourself the same questions about the fundamental value of a company in a world where, again, we tend to do this through scenario analysis where we kind of test our assumptions and say, okay, well, what are the different ways that this might affect companies in the long term? What are the different ways that the economy might end up being affected, whether that be in the very short term or indeed in the long term? So for us, it's all about scenario analysis and setting ourselves waymarks that we can keep looking to and keep testing our assumptions and checking that we are on the path that we think that we're going on.
Long-term perspective is always valuable in investing, no question about it. At the same time, the entire fabric has shifted. The range of possibilities is much wider, and probably the midpoint has shifted down to some extent. In that world, at what point do you become concerned with respect to companies that a liquidity problem could turn into a solvency problem?
Well, I think that there's obviously natural questions being asked about that, particularly in kind of more high-yielding space. However, I do think it's worth pointing out that, a lot of the work that's being done at the monetary policy level and at the fiscal policy level should support, the kind of point to particularly creditworthy firms, but also should broadly support the economy to continue to function and, importantly, to continue to provide workers for example, in the UK, where workers' pay is being broadly covered. That's very helpful for all companies because it allows them to take this kind of very temporary dip and not turn it into kind of a much deeper issue. So I think very much the question becomes around how are companies going to benefit from the fiscal packages, from the monetary packages, and whether there's a kind of a world in which that they can kind of continue to grow just once this very, unusual crisis is moved forward. And I think can't underestimate the nature of this crisis. It's very unusual compared to the crises that economists are used to dealing with. And I have to say, I've never heard economists talking about virology quite so much as I have in the last couple of weeks.
Exactly. It makes it pretty difficult for all of us. Thank you so much, Stephanie. Really great to have you with us. That's Stephanie Kelly. She's from Aberdeen Standard Investments. And a programming note, tonight on Bloomberg Television and Radio, we're going to have a special edition of Wall Street Week. We'll hear from House Speaker Nancy Pelosi, Cisco CEO Chuck Robbins, former Treasury Secretary Larry Summers, and much more. That's coming up at 6 p.m. Eastern Time, and this is Bloomberg. This is Balance of Power. I'm David Weston, and let's check in on the markets, which we have actually, they're off their lows right now, but they are still down without a doubt. Kaylee Lines is here to explain it all to us. Kaylee?
Yeah, we're taking a bit of a breather here after what has been a pretty wild week. I mean, we're coming off the best 3 days for the equity market since the Great Depression era, all the way back in 1933. And I think a lot of that optimism, that fervor around the fiscal stimulus is being met with this kind of grim reality that the coronavirus is still spreading. The economic picture is looking pretty grim when you consider UMich consumer confidence this morning was the worst since the financial crisis. We have over $3 million jobless claims, this week. So that, I think, is what's setting in today. That said, we are still heading for our best week since 2009. We're up double digits on the S&P 500 on the week, even if we are giving back some of the gains today.
And the month? I mean,
right.
Yeah, if you take a week, that's right. But if you look at the month, I think it's the worst since 2008.
Yeah,
like
it's still pretty ugly. And I mean, I just take a look at the Dow, for example, which from Monday's close to yesterday's close rallied into a bull market, from a bear market. And so the velocity with which things are moving is really quite incredible. But that said, even though the Dow actually technically hit bull market territory yesterday, it was still down by about a quarter from its peak. So everything is kind of relative.
I also wonder, you sort of have a back and forth between Washington and the stimulus bill on the one hand and the coronavirus on the other. When you talk about the Dow as opposed to the S&P or NASDAQ, I wonder how much that was because of the stimulus, because some of those companies in there are eligible for some stimulus.
Well, you have Boeing, which is the largest heavyweight in the Dow, had a really incredible week. Granted, it is giving back a large chunk of those gains today. Boeing is actually one of the biggest underperformers on the day. It's down by about double digits, as are a lot of the companies that were part of this really feverish rally we've seen this week on stimulus optimism, cruise lines included, because they were some of the biggest gainers over the week, and they were actually excluded from the bill, and so they're down by 20% today.
Wow, so we're going into the weekend. We're also going to the end of the quarter.
Yep.
So there's going to be a lot of repositioning.
A lot of rebalancing definitely going on, and going into a weekend, as we've seen pretty much all year, people are more reluctant to put risk positions on, as we have no idea what could happen over the next 3 days.
That's the one thing that is for sure. We don't know what's going to happen. Okay, thanks so much to Kaylee Lines. Up next, we're going to talk with Richard Trumka. He's head of the AFL-CIO about how his union members are dealing with the corona crisis. He has over 12 million of those members, and they are really being affected by this economic crisis. That's coming up next, and this is Bloomberg. From New York, this is Balance of Power. I'm David Weston. For Bloomberg First Word News, we go now to Ritika Gupta.
Thanks, David. House Speaker Nancy Pelosi is promising to push that $2 trillion stimulus package through final approval today. But the real test comes after it's signed by President Trump. The success of the measure will depend on how quickly the aid can get to beleaguered consumers and businesses. That's a huge challenge for federal and state agencies that aren't built to move quickly. There was a major change in tone overnight between the US and China. President Trump and Xi Jinping pledged in a phone call to cooperate. This is the fight against coronavirus. That comes after weeks of rising tensions. President Trump tweeted, quote, "We are working closely together." Xi said relations between the two sides are at a critical moment. And British Prime Minister Boris Johnson has the coronavirus. Johnson experienced mild symptoms, and a test confirmed yesterday he had the illness. The government says he is self-isolating in his Downing Street offices. UK Health Secretary Matt Hancock also has the illness. Saudi Arabia is holding firm on its position in the price war with Russia. The kingdom said today it hasn't had any contacts with Moscow about oil production cuts or about enlarging the OPEC Plus alliance. The comments came hours after Russia said OPEC couldn't rebalance the market by itself. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. David?
Thank you so much, Ritika. Help is on the way now for many American workers in the form of over $2 trillion being injected from the federal government. It's been designed to keep people on the payroll, even maybe bring some of those people back. But how much can it cushion the blow for the average worker? We welcome now someone who represents more than 12 million of those workers nationwide. He is Richard Trumka. He's president of the AFL-CIO, and he comes to us from Potomac, Maryland. So, Richard, thank you so much for being back with us. We always want to start with, how are your workers doing? How are your members?
Well, you know, a lot of them are laid off. We have people still working every day on the front lines. They don't have the equipment they need to keep them safe. We have people from letter carriers, to nurses, to teachers, all working hard, not having the equipment that they need. And then we have a number that are laid off and are waiting for relief, looking for help. So they're beginning to hurt.
So do you have any sense from your point of view, I know you've covered this legislation carefully, I'm sure you had a lot of input into it, how much assistance will be given by this legislation that's supposed to be enacted today?
Well, first of all, on its own, this bill is not going to be enough to revitalize our economy or keep our people safe as the pandemic expands, but it is a step in the right direction. Congress has to focus on what I would call the 4 Ps. First of all, they have to focus on protecting workers on the front line so they can stay on the front line and keep this pandemic contained and keep the economy moving somewhat. The second thing is pensions. 35.5 million people depend on pensions for their livelihood. Those pensions were in trouble before the pandemic, and now they're in crisis. Nothing was done in that bill to help them. One man, David, stopped that from happening. That was Mitch McConnell. Everybody else said it should happen. The third one is paid sick days to help people get through the transition period. And the fourth thing is the Postal Service. The Postal Service is under tremendous stress from the pandemic, and nothing was done in this bill to help the service meet the crisis that's out there. So Congress is still going to have to work if we're going to make sure that we contain the pandemic and keep things moving somewhat so that the economy can then pick up after the pandemic is gone.
So, Richard, let's take up at least some of those Ps. Start with the first one, protect, because the last time we were together, you pointed out the need for, it's called personal protective equipment for the healthcare workers across the country, that in fact the White House had been reluctant to really make that a priority. Has that turned around? We've learned a lot about N95 masks now and PAPRs.
Some of it has. Some of it has because the labor movement has been locating and accumulating that equipment and getting it out to nurses. But there's still shortages everywhere. We still have nurses making masks, doctors still using the same mask for a whole week if you go. The president should enact the Defense Act and get it into movement. He did it, but then he hasn't used it. He needs to use it to get production up and get those safety equipment into people's hands, because we still have shortages. And then we have a whole class of people that don't have any protection yet. A letter carrier, a grocery worker, food workers that are out there every day coming in contact with the general public. No protection, no standard for them. We asked for a standard to be passed. They didn't do it. We asked for additional OSHA inspectors. OSHA, by the way, David, has the fewest number of inspectors and healthcare specialists in its history. We need more of them, and nothing was done in this act to provide more of them so that they could help workers on the job stay on the job so that they don't succumb to the pandemic themselves and then be not only not on the job, but then need care themselves.
So, Richard, let's go back to the Defense Production Act that you referred to. As you say, the president invoked it, but then I saw in some of the news coverage it wasn't exactly clear what he was doing with it, and he wasn't quite straightforward. Why is it, you deal with the White House all the time, why isn't they don't just say we have to marshal all our equipment, all of our capability here to make as many N95 masks, as many PAPRs as we can as fast as possible. We're going to set a nationwide quota, we need this number, and now we're going to figure out who to tell what to do to get that done.
Well, at least he's now named Rear Admiral Pawlowski to do this. So he has one person that's starting to do it. I don't know why he didn't do it. He allowed a bidding war to take place. You heard the governor of New York, Governor Cuomo, say, A mask that normally costs 72 cents, he had to pay $4 for it. He paid the $4, but there are others who can't pay that $4. And so that bidding war should have never been allowed to occur. Had he invoked and used the DPA, the Defense Protection Act, he could have increased productivity, kept prices down, and made this a whole lot easier on everybody out there. We have nurses that don't have masks. Or face shields to keep them safe. We have nurses that are getting infected. We have frontline people getting infected because they don't have the adequate protection that they should have, and it easily could have.
Let's come back to postal workers. I have to say this is sort of near and dear to my heart. We have our local letter carrier who delivers the mail, picks up mail every day, named Ricky. And I've looked at him and thought, boy, he's going door to door to door. What kind of exposure does he have? Why is there a reluctance to try to at least have some standards to protect those people who are really serving all of us?
Well, we got reluctance. We got pushback from the American Hospital Association when we asked for an emergency contagious disease standard. That would have protected everybody. You know, whether you were a local government person, public sector or private sector, it would have given everybody protection and the equipment. They pushed back on it because they didn't want to do that. And not only didn't they do that, the CDC actually rolled back the old guidelines to make it less protective for workers on the front line. So that letter carrier that you see, keeping the world going, keeping people informed, taking cards from loved ones into a nursing home so that they can have some contact with people, is exposing himself or herself every day to the disease, and that should not happen.
It's so true, Richard. I just want to get you injected in a dispute between Mary Barra, the head of the GM, and President Trump. He's just tweeted out recently, really taking them to task because of the ventilator situation, saying that they said they were going to give 40,000 much-needed ventilators very quickly, and now they say it's 6,000. He says, as usual with this General Motors, things are just never seem to work out. Who has the better of it? You must know about this. Is GM right or is President Trump right?
Look, if the president would just act and say, you must do this. If you leave these businesses to their own devices, they will make things that give them the biggest profit. The PDA allows him to say, you will produce this number of things, and they must do it. He has the authority to do it. He must invoke that so that we can get the equipment that we need into the right hands. New York right now, the epicenter, doesn't have enough ventilators. And there's going to come a time when the doctor's going to have to decide who gets a ventilator and lives and who doesn't get a ventilator and dies. That should never happen, and it need not happen. We can get that equipment out there. We just need to have a plan and someone who says, do it. And that's the president's role.
Richard, this is always very helpful to have you on to give your perspective. You really teach us stuff we don't know otherwise. That is Richard Trumka. He is, of course, the head of the AFL-CIO. Still ahead, noted economist Thomas Piketty joins us. His thoughts on whether the coronavirus will result in a fundamental reordering of our society and our economy. This is Bloomberg. This is Balance of Power. I'm David Weston. Breaking headline now from New York. The governor, Andrew Cuomo, has just had his news conference, and he has announced that the New York State schools will remain closed through April 15. And so the state schools will close through April 15. At the same time, he says he thinks it's another 21 days, perhaps, before the number of coronavirus cases really hits its peak. So New York State schools closed through April 15. Meanwhile, we're going to turn to one country that has had some success in slowing down the spread of the coronavirus. Argentine President Alberto Fernandez is credited with taking early action against the virus. Joining us now on the phone from Buenos Aires is Patrick Gillespie of Bloomberg News. So, Patrick, thank you so much for joining us. You have a terrific piece on the Bloomberg on this subject now, and it's a little bit of a tale of two countries, Mexico and Argentina.
Yes, David. President Fernandez here in Argentina really started to speed up his response once the World Health Organization declared coronavirus a pandemic earlier in March. Fernandez also spoke with Pedro Sanchez in Spain and Giuseppe Conte in Italy. Those are the two countries where many Argentines' ancestors hail from. And at that point, Fernandez ordered a nationwide lockdown until at least March 31st, and it could be extended. Bolsonaro in Brazil and AMLO in Mexico took a more nonchalant approach, dismissing warnings from Europe and institutions like the World Health Organization. So I think that's why we're seeing a kind of night and day approach here in Latin America.
Very different approach. Are we seeing any difference in results thus far? What is the situation in Argentina with respect to the coronavirus?
Argentina has nearly 600 cases. There is concerns that there could be more because testing hasn't been very high so far. There's been less than 3,000 tests in Argentina, whereas next door in Chile, with a much smaller population, there's been double the amount of tests. So it's still a very contained situation, when compared to other countries globally. But there's certainly the concern that we could see the exponential curve increase that we've seen in Spain and Italy, where a lot of Argentines travel to and from.
And what has been the reaction from the Argentinian people? I mean, have they accepted these severe restrictions fairly with equanimity, as I guess I would say it?
Yes, David. Argentines are backing President Fernandez and really the whole entire political class in these really strict measures. There have been obviously incidents of people breaking, anecdotes of people breaking the lockdown and trying to do normal activities. But by and large, Argentines are really uniting behind their leaders, and it's a very unusual sense of consensus here in Argentina, where politics are usually very divisive. There's lots of very lethal politics, to say the least, and the country is obviously in its own ongoing economic crisis. So you're seeing a rare amount of unity, both from the people, staying at home, heeding the call of their leaders, and both a lot of bipartisan actions being taken across the board.
Give us a sense of the state of the Argentinian economy. We're all concerned about what this is doing to our economies as you shut it down. Where was the Argentine economy before this happened, and where's it going to end up?
David, the path ahead is pretty clear. In that sense, Argentina will plunge further into its economic crisis. Goldman Sachs today is forecasting that the economy in Argentina this year will contract over 5%. To put that into context, Argentina has contracted more than 2% in both 2018 and 2019, and that's been a devastating crisis up until now with 50% inflation. The peso has fallen off a cliff. Job losses are stacking up. So now economists are seeing a recession twice as bad as what we've been seeing before the coronavirus hit. And it's a particularly hard kind of double whammy for Argentina because investors are fleeing risky assets like Argentine bonds, while raw commodities, which are the real moneymaker here in Argentina, the prices for raw commodities are falling because of low global demand triggered by the virus. So we're seeing a much deeper and longer recession in Argentina, and they're getting hit by all sides here.
Okay, thank you so very much, Patrick. That's Bloomberg's Patrick Gillespie. He's reporting now from Buenos Aires. And a programming note, tonight on Bloomberg Television and Radio, we're going to have a special edition of Wall Street Week. We're going to hear from former Treasury Secretary Larry Summers, New York Stock Exchange President Stacey Cunningham, House Speaker Nancy Pelosi, and many more. That's coming up at 6 p.m. Eastern Time tonight, and this is Bloomberg. This is Balance of Power. I'm David Weston. The global economy is being tested like seldom before, and although it went into this crisis with real strength, it also went in with really record disparities between the rich and the poor, particularly in the developed world. We welcome now an economist who has studied the history and the politics and the ideology underlying those inequities. He is Thomas Piketty. He is a professor at the Paris School of Economics and author, most recently, of Capital and Ideology. So welcome. Great to have you, Professor, with us. A fascinating book. I wanted, if I can, try to take this 1,000-page book everyone should read and put it together with what we're experiencing right now. Is there any correlation between inequality on the one hand and the virus? It looks like the virus does not pay attention to which societies have been more equal or less.
Yeah, well, by the way, I should say the book is very readable. I'm sorry that it's so big, but it can be read by anyone. And what it will show you in the context of the virus today is that, times of crisis like the one we have today are really times when the organization of the economy is being redefined, and where we completely change the view that we used to have about what is possible and what is not possible. And just a few weeks ago, everybody would have said that it's impossible, to keep planes in airport, to keep people at home. And when people were asking about trying to slow down a little bit the pace of international airplane transportation or international trade in order to reduce carbon emission, everybody was saying, oh no, this is too costly for the economy, we will never do that. And then suddenly, in a few days, in a few weeks, or even in a few days in some countries, everybody decides to shut down everybody. And, I am shut down in my apartment in Paris right now. And, what this shows, and we see that very often in history, is that our common beliefs about, how the economy should be organized, what government should do and can do, change all the time. And I think this crisis is probably going to have a lasting impact on how people view the way we regulate our economy. What we see is that, with the sanitary crisis, we have sort of developed over time rules and procedures in order to take a very strong decision like the one we've just taken. But when it comes to environmental crises or social or inequality crises, I think we are not there yet. And I think we need to develop alarm system and reactions also for this other type of crisis.
If I may, let me try to pick up on what I took from the book and maybe apply it now. You talk about, I believe you call them ruptures, where basically a lot of the inequalities are not inevitable, they're ideological choices, and ideology continues until there's a rupture. Do you think that this pandemic is or could be that sort of rupture that would make us rethink our ideology?
It could be, yeah. I think what people are going to realize after this crisis is that, in fact, when governments want to control the economy, they can. So it's a matter of political choice. It's a matter of how we represent to ourselves what is justified or what is not justified. And I think it could have a comparable effect as the 2008 financial crisis, where suddenly people realize that it was possible to bail out banks, it was possible to print a lot of money to save the financial sector, and many people, 10 years later, are still wondering, okay, but if we can do that with the financial sector, why can't we do that with the environment? Why can't we do that to solve other problems? And I think this has transformed the perceptions of what is possible and what is not possible. And as long as there is not a better answer about what we can do with this policy tool, I think we will. There will be a lot of perplexity about this, and I think this crisis is likely also to increase this perplexity of public opinion about why it's not possible to regulate economic capitalist forces.
The experience coming out of 2008, 2009 is a fascinating one. I'm glad you raised it, because we did support the banks, and we supported capital to a very large degree. The people who came out of that better off were the owners of capital. We didn't, not necessarily because we wanted to be nice to them, we were persuaded that we needed to do that to grow the economy. Coming out of this crisis, can we have the sort of equalization that you really advocate in this book and your prior book on capital in the 21st century? Can we have that and have the growth we're going to need? Because we are surely going to need economic growth globally to come out of this crisis.
Well, I think at some point, we'll have to change our view about, in particular, how to deal with our public debt. Because at some point, when you look at history, and I show this in my book, is that we've already had, big piles of public debt like the one we have today in the past, sometimes even bigger, in the aftermath of World War II. What we learned from history is that if you want to deal with this kind of huge pile of public debt, and if you want to be able to address new challenges of the future, like environmental challenges, social challenges in the future, then we'll have to make tough choices. And in particular, what you learn from history, and I describe it in my book, is that after World War II, around 1950, 1955, many countries decided not to repay their public debt. For instance, in countries like Germany and Japan, there was a decision of the time to have an exceptional wealth tax on very large wealth portfolio, in particular financial wealth. And if you look at this episode retrospectively, in fact, it was a huge success in the sense that it allowed these countries to reduce very quickly, in a few years, their public debt, which was over 200% of GDP at the time. And this allowed these countries and this government to have more financial resources to invest in reconstruction, to invest in public infrastructure, in public education. And this was very instrumental to the very high growth performance of the 1950s, 60s, 70s. And I think today the challenges we have to face are different, but still there are some similarities, which is that past a certain point, the sort of orthodox solution to public debt, which is, okay, you just need to repay little by little during the next century or the next half a century. Well, that's not the only solution, and it's probably not the best one.
Yeah, it's fascinating. It's a terrific book. I really urge everyone to take a look at it. Many thanks to Professor Thomas Piketty. He's professor of economics at Paris School of Economics and author of Capital and Ideology. Coming up here, Balance of Power continues on Bloomberg Radio. In our second hour, we're going to talk to HP CEO, former CEO, and presidential candidate Carly Fiorina. And a programming note, we're going to have Balance of Power Monday returning to 12 p.m. Eastern Time. This is Bloomberg.